Hi traders, and welcome to my video on the Tweezer Top and Tweezer Bottom candlestick pattern. This is a great candlestick pattern that can help you catch moves like this one for over 1,500 pips. Not bad. So this is a really easy to spot candlestick pattern. What we're looking for is a up candle and a down candle where the tops meet the wicks of the candlesticks meet, like a pair of tweezers. Okay, so this is going to then be considered the resistance. It's as simple as that. Two candles with the same tops can be the exact price or close enough. Okay, you will see this pattern form in uptrends, downtrends, and ranging markets. For the purpose of this strategy, which is a trend trading strategy, we're going to look to capture these tweezer tops on pullbacks into a downtrend, and we're going to look for tweezer bottoms as pullbacks in an uptrend. Reason this is because we're going to look to catch big moves. I'm using the Euro Yen 1 hour chart here. This is the MT4 platform. You don't need any specific indicators to find tweezer tops and bottoms on your charts. You just need to be able to draw a line. It's as simple as that. So why I chose this particular tweezer top formation here is because we have seen that prices hit resistance level here. It's making lower highs. We can see that the market is starting to dwindle down, and I'm confident by this time that we're looking at a downtrend, and I'm looking to enter on the pullback from this move here. Price comes up here, and then I'm going to look to get on the reversal back towards the downside. Okay, some may argue that you have tweezer tops here and here, even here. This is the thing, you can be taking trades all day long based on tweezer tops. It's just filtering them out for the right opportunities. I mean, these all would have been valid entries to get in on this move early. However, you will find times when you could see a tweezer top like this, and then price will continue in that direction, or it will just consolidate within a range. You can trade them how you like. Personally, I like for the trend to have. I like to wait until the trend has formed. Okay, so as we see here, the trend's begun. We come down, tweezer tops there, and this would have been a good point to consider entering just after the formation of that. Had we have done that, we would be looking at a huge move downwards, and we would have made a good amount of profit on that move. As price was falling, first of all, the initial stop loss can be above the recent high, so around here somewhere. Relatively tight stop loss. And as price was moving downwards, I would have been looking to move the stop loss above the recent highs here and just lock in some profit. Just, you don't want a winning trade to turn around and take your stop loss out for a loss. So you can lock in a break even. You can close part of the position if you want. I just want to try and maximize the move as much as possible. As price falls down to this area, we could have had our stop loss based on this support around here. As it kept falling down this, stop loss moved to here, to here. So you would have got as much as possible out of this particular move. Had you had entered here, exited the trade here, you would have been very pleased with yourself. There were signals of a bullish reversal. You can see the trend starts to move towards the upside. We do have a W pattern forming there as well. So there were signs to perhaps exit the trade there. So all of this could have been caught simply by a basic tweezer top pattern. I did mention earlier about these perhaps being too early, but now that I'm looking further out, the downtrend actually started before, so we could have considered taking these trades, especially considering that this level of resistance here, it was support previously that was quite significant. So once it was breached, we know that this has the potential to be strong resistance. But that being said, we still had a good solid entry here. Was actually did actually form a wedge pattern as well. So if we didn't jump in straight away, we could have just waited to see how price played out. And as you can see, there was a breakout below that wedge pattern and we continued downwards. Yeah, we almost have I don't want to confuse you with too many lines on the chart, but I think it's good to be as aware of as many price action setups as possible. So we almost have a double or triple top here. Okay, granted, prices are quite on resistance, but this resistance, I'd say, is been tested 1, 2, arguably 3 times, and we can draw the neckline, which is basically the support within the triple top or double top pattern, and then you could look to trade the breakout of that neckline here. I mean, that's a completely different strategy from the tweezer top, but I do have videos on triple tops and double tops as well. It's just good to be aware. In my videos, I like to not just cover the strategy that is the main purpose of the video, but I think it's important you are aware of other reasons why we take a trade or why we wouldn't take a trade, and just inform yourself as much as possible. Okay, so that's an example or a few examples of tweezer tops using further price action analysis and candlestick patterns for entry. Obviously have good money management as always. Okay, if you did miss the entries and you're late to the party, just keep your eye out, because on the way down you'll find more. We have downtrend is obvious there, tweezer top there. Again, breakout of the low of that candle could have been a potential entry point. Had a shooting star here, so the signs were there that the market was going to continue to fall. Not tweezer top related here, but the price did form a nice support level and then break off the ledge there. Another good entry point. Okay, so that's tweezer tops covered for you. Hopefully that was clear. If not, please let me know in the comments and I'll do my best to elaborate for you. I think I mentioned at the start of the video, but I do like to use the higher chart time frames, 1 hour and above, just because I find candlestick patterns tend to be a lot more reliable because they contain more price data. That being said, let's look at tweezer bottom candlestick pattern. So we have the uptrend, and what we're looking for is a candle formation, 2 candles with the lows that are either the same or very, very close, with 2 similar wicks forming our tweezer bottom there, as you can see. Okay, so we can trade. I wouldn't trade it blindly, as I said, but you can see that there's already been an uptrend established here. Perhaps we might want to use a breakout of the previous candle as entry point, or we can always use longer term resistance such as this level here. You can see as price pulled back from the tweezer bottom and then continued up, this level of resistance, when it was breached, could have been an entry point here that actually held up as support, which perhaps emphasizes how strong that level was. Okay, so say we used the breakout of the recent resistance for the entry in this tweezer bottom candlestick pattern. Could have placed our stop loss just below this level of support here. And again, another big move over 500 pips. Not bad at all, especially considering it takes you hardly any time to identify these on the charts when you're using the 1 hour chart time frame. Again, as with the long trade, as with the short trade, we could have trailed the stop loss as we seen price moving up in this direction. We could have been moving our stop loss below the levels of support. So if price was here, stop loss could be just below here. Price came up here, we might want to bump it up to around here. Price was here, we'd move there, and perhaps here, once we see this sort of consolidation and range, we might be looking to exit the position. At very least, just have the stop loss there ready for when price turns around. As you can see it turn around with some force. Nonetheless, we still would have caught a big move all the way from this breakout up until here. Okay. Yeah, so that's tweezer bottoms. Remember, tweezer bottoms are for uptrends, uptrend, pullback, tweezer bottom, entry. The opposite for tweezer top, so downtrend, tweezer top, entry. Very powerful candlestick patterns, especially in trending markets. These are good examples. There will be examples when price just continues going against the entry, which is why it's important to have sensible money management in place, cut losing trade shorts, and when you do get into a good positions such as those we've looked at, lock in the trade. You can take profit off the table and let the rest run. Just make the most out of each good trend that you do get into, because as they say, the trend is your friend. Hopefully you found something useful in this video. Please like and subscribe for more. Thanks for watching.